Good evening. This is Ken of Tortoise Capital. This is the nightly strategy podcast for August 25th, 2020. We're going early tonight. We have a late soccer match, so I want to get this one in the book. Let's take a look at the market health check. Pretty good day today. So let's look at the last 10 days. So Monday was a big move up from the previous weekly trading range that finished strongly. We had a new 10-day, 30-day high. Today started up with a fractional gap up, sold off, and then finished very strong with a new 10-day high, a new 30-day high, pushing the boundaries of Z2. We are knocking on the door of the RL10 peak all-time price, so it's just as strong as it's ever been. The slope of the 30-period regression line is strong. The dragon is steeply and sharply moving up. The Bollinger Band mean is strong and up. The PSAR is moving along with our protective stop, and the Z1 is now paralleling the bottom of the dragon. So the dragon riding the edge of the river. Just for reference, from today's close, a 5% sell-off would bring it back to about 327. A 2.5% sell-off would bring it back to about 335.5. A 1% sell-off would bring it back to about 340.5. So that's the magnitude of the moves. With price at these extended levels and two really strong directional days in place that are already larger than the last weekly gains, I would be bringing my stop up here tightly to 342. I just still feel like this market is vulnerable to these kinds of sell-offs that you see here, and I want to make sure that I lock in these exceptional gains. However, we should also notice that the market is continuing to vote upwards every time the question is put to it, instead of failing. This failure to fail is information, and it's following through to the upside. Today, the market went into bullish quiet conditions, and the ADX is now above 30. So that's just as strong an upward bull as you could ask for, especially in these uncertain times. Just greater disconnect now between the economy and the market itself. But while that trend persists, you got to trade what's in front of you, and that's what's in front of us. So, strong upward moves. Support levels, just going through the ritual. Daily low 342, upper skin of the dragon 340, the spine of the dragon 339, belly of the dragon and Z1 at about 337.5. Tomorrow's PSAR will be at 336.52. Tomorrow's 10-day low, so the 10-day low today was here, but tomorrow's 10-day low is the one we care about. That's here, and that's at 335.28. Bollinger Band mean 330.75. The previous peak RL10, which was the previous upward excursion, 326.53. Previous belly of the RL10, and also now at Z1, call it 323. The previous peak RL270 fair value of all time here was 321. Today's long-term fair value is 312. So we're closing in even on that measure. So what that says is everything north of 321 is exceptional outsized gains. And so those are the gains that we really want to lock in. You'll notice that that previous peak, RL270, is very near the 30-day low. So these 30 days of gains are just exceptional and amazing. And so now you have to decide how much of that you want to protect. Do you want to protect just to the Z1, or the Bollinger Band mean, or the PSAR, or the positive Z1, or the skin of the dragon? This one is at least reasonable. I'm going to pick a one-day low, but having the northern skin of the dragon and the baby dragon right in here, that's reasonable. Belly of the dragon is the most I could consider giving back. Going from Z2 to Z1, there's no reason to give back more than that. And if this should act as strong support, if you wanted to give it the benefit of doubt and use this as strong support, you'd be willing to use the PSAR, tomorrow's PSAR 336.5, and that would be about a $7 or just a little over 2% of protection. Okay, let's take a look at what sectors and segments work well today. Excuse me. So today, the market itself, SPY, was up 0.36. The Russell was up 0.11. The Dow was down minus 0.2. So it was the broad large caps rather than the small cap speculators and the large cap focused. So it was the market today. What outperformed the market, we're going to look at sectors first, outlined in blue. So oil exploration, 0.47, and technology, the broad tech, is at 0.5. Silver, 0.65, healthcare, 0.68. Brazil, emerging markets, and Mexico, between 0.8 and 1.0. This is the Facebook, Amazon, Apple, Netflix, Google index. So the big fat tech leaders, modern tech leaders, 1.1. And here's the winners in that one: Amazon, Google, Microsoft. In the battle of the triple techs, the broad tech sector, TECL, was 1.47. The top cap-weighted triple techs in the TQs were up 2.33. So those focused cap-weighted stocks at the top of the Qs were outperforming the broader sector, and that's why you're seeing things like Google, Amazon doing very well. And then Facebook winning the day at 3.47. Clean energy, 2.1, oil 1.9, and Devon Energy 1.86. So energy has been underperforming as a sector, and so this may be the beginning of resurgence in their swing performance. Other noteworthy symbols: Intel 0.6, Tesla 0.45, still holding above 2,000, and wheat and precious metals 0.41 with a strong finish today. Things that underperformed the Dow now, we'll look at the sectors highlighted in red. The S&P up 0.36, the consumer discretionary 0.33, finance 0.28. We've seen the Russell already. Industrials minus 0.13, Japan minus 0.14, broad materials minus 0.4, and there you see some of the metals. Alcoa, U.S. Steel. So they suffered, whereas we saw Cliff and Nucor Steel closer to the top. So there's Cliff at 1.4. So that's really distinguishing itself from its other peers in the metals group. Old school leaders like Cisco, Walmart, Goldman, all of those suffering today. Treasuries down 0.77. As long as this is holding above 160, then treasuries are still stable for the long term. Apple, IBM, Nucor, minus 0.8 and 0.9. Energy as a broad sector, minus 1.4, which makes the Devon Energy and the clean energy and oil exploration such a standout. So I'll be looking for them to continue their momentum tomorrow. And then big losers for the day. Boeing, which couldn't hold on to yesterday's 7% gain, and then Kodak just getting smashed as the Robinhood investors learn their lessons. Shifting now to the daily report, we just want to hit some highlights. So we've already covered the daily market health. I would just want to show that this region of consolidation gave way to this move up and now a second leg up. So we're pushing the upper limits of the second leg up, and so that's why I'm really concerned about having a nice tight stop. For me, it's the 1-day low, because I want to preserve most of this move. I don't want to give back much of that just because it's going so well and it's abnormally good. That doesn't make me want to give it more room. It makes me want to count my blessings. Today, the market went into bullish quiet. That's very good for the long side. Everything broke out today on new highs. The 3-day breakout, 121, just amazing. The percent stretch above the 200 is basically 12%. So that's a 10% move above the 200-day moving average. And with ATR at a very quiet 0.88, that 10% actually represents 12 ATRs above the 200-day moving average. So we are strongly into the bull. The ADX at 34 tells you that this is a very strong bullish move. It's actually hard for that to maintain that strength of move over the long term. And that's why I'm a little more concerned about preserving these outsized gains than otherwise. So the first leg up was here. The second leg up was here in the risk Z. So we still have favorable conditions, although I will say that this decay here in risk Z is now causing me to remember why it's important to lock in outsized gains. No signals in channeling and overreaction. The 10-day min pains, these are the relative strength leaders. Visa, Microsoft, Procter, Verizon, and the Dow. And then the 10-day max pains, these are the ones that are the most sold off from their 10-day high on a percentage basis. And these are either underperformers or deep value plays. Cisco, ExxonMobil, this is probably a reflection of them getting bumped from the Dow. Chevron selling off in sympathy and the weakness in the energy, and then Morgan, the weakness in finance. Devon Energy still on sale, and today's good move was possibly stage one of a nice recovery. And silver still has some room to make up, and today was part of that first day of recovery. Handful of dojis today. One channeling over here in Walmart. So Walmart is showing a channeling and a triple screen. Still some good numbers in here for the auto framer, especially Cisco at 9.3 to 1. Today was an underperformance in Cisco, and an exceptionally underperforming the last 10-day, 1 month, 3 month. So we want to be mindful of that as an opportunity. The big winners are these highlighted in green, the big 1-day winners, and you can see the percentages that they scored that make them stand out from the Dow. Nothing in the RSI2, everything is being pulled along by the broader market. And then you'll just notice just how bad ExxonMobil was today. It's dramatically underperforming in every measured time frame, and Boeing was not much better today. Okay. I will note the 551W in United Health, and so that's and it was a big winner today. So that's the possibility for a follow through that's worth framing. ETFs, a handful of dojis. The bounce here in the Dow, in UDOW, which is an overreaction short, simply says the Dow has moved so strong that if the market were to fail, then this is one where outsized gains would need to be preserved, and so there could be a sharp downward move for that reason. Two symbols test out well on the auto framer. Silver and gold still remain attractive on a return to the 10-day high. So if we saw a market selling off and a rebound in the precious metals, then gold, silver, or the proxy wheat and precious metals would be reasonable. A handful, 3 of 551Ws, and that would be we're looking at Mexico, gold, and silver, and then a triple screen in gold. So there, I really think these three may be ready for some gains here. The emerging markets, Mexico and Brazil. So if we saw a pause in the U.S., these global markets are showing some evidence of gains, like emerging markets, strong vote of confidence on the breakout. Same in silver, same in USO, and then that's SPY. And then also in consumer discretionary had a nice breakout day today as well. The in the green are the symbols that are outside to the north of their river. Those are the statistically most powerful moves compared to their previous performance, whereas Cisco and Treasuries are out of the river to the south, and that's the only ones that are in that condition. Metals and mining, Johnson & Johnson, Coke, and Caterpillar, and I would say the Russell, all coming in on the pinch, the most compressed pinch box, so the lesser volatility is setting the stage for a potential breakout. The auto framer offers half a dozen symbols, the usual suspects with all the mechanical trade frames that are built, and some really nice reward to risk ratios just using mechanical swing trading one day at a time. So those are worth looking at. The top shelf, these in the green, these are the ones that are the most below their long-term fair value. So Intel is almost 10 ATRs below its long-term fair value, whereas these in the red are the most beyond their long-term fair value and are at risk of being overheated, but for the short term should also be considered relative strength winners that you could add to momentum positions there with care. The daily squeezes, these are the ones that had exceptionally small ranges compared to their average range. And so if it breaks out from today's high, then you have the possibility of some really nice reward to risk ratios on a single day pop. And I like seeing gold, silver in the S&P, Coke, Intel, healthcare, and tech. All of those are poised for great big follow-through moves on Wednesday. If we get a third day of momentum, that could be the big move of the day tomorrow, is a Wednesday follow-through when people who've been just watching in disbelief just say, can't take it anymore, got to get on it. Those are the ones to watch for big one-day moves. Let's see, we have, let's just move on to, got some nice breakouts in the bright green here in the multi-time frame NDX. These are the symbols that had the biggest breakouts from previous trading ranges. So discretionary, the S&P, emerging markets. Now these are nice here because their 10-day ranges are low, and yet the 3-day accelerated moves tell you that there may be some more room. Only Treasuries suffered a new breakdown in their 3-day low, and gold still has some more room to play to the upside. The 30-day slope is well within normal boundaries. So even though we've had a nice move, this is not a runaway move to the upside like we may have seen here or here or here. This is a measured move that is just chugging along like a cross-country train. So we want to stay connected to that move. Excuse me. Volatility remains exceptionally low, and you can see that we just went into quiet conditions here in terms of volatility. It's continuing to just ride the rails above the river, and now it's testing that previous high and making breakthroughs in the S&P. So the RL90 slope is above that yellow zone average, but not exceptionally so. It's been stronger, but this is a failure to fail, and just as evidence of that train continuing to work. But we're at the upper normal limits of the RL30 and the RL10. So this just feels like it is fully and richly priced, and there may be one more momentum burst left. But I'm prepared to lock in those gains and not let them escape. At the same time, I'm ready to get back in with a little bit more exposure intraday and take advantage of the growing season while it's working. And that's everything that I want to cover today. And we will see you in the chat room and ready to work tomorrow. Take good care.